All right, so today was a decent day. A little bit frustrating. Made some mistakes that we'll go over. But going into the day, we had CPI, I think, or something like that, that moved the market pretty decently. As you can see, this is the 8:30 candle. We had a large wick, and if you watch Dodge or you watch my videos, I like data wicks, data lows or highs. Just an abnormally large wick on a candle to be a good target for the day. And it helps that I was overall bearish going into the day as well, because we have an SMT on the higher time frame with ES. ES has taken the all-time highs over here. NQ obviously has not. We swept this high inside this fair value gap. We displaced lower. We did sweep these lows at the end of the day yesterday. And then we kind of came up, and this is Asia high. So this area was where I was looking for price to sweep before going lower this morning. So as you can see, we take out the high here when the market opened around 9:30, and then we displaced lower to the downside. So going into the day, I had the bearish bias. We'll drop down to the lower time frames. We actually will mark out also this 1 hour bearish fair value gap we had right here. It's kind of smaller, but we had a bearish fair value gap that we were using as an extra confluence. We had that, and then maybe this 15-minute fair value gap right here, a little small one, this gap to the left right over here. I was looking maybe to use that if it came up higher, but it didn't. So again, we were looking at the news candle, and then our target for the day was down, all the way down here. This was our main target for the day. If this got taken, that was kind of just the last realistic target to the downside, because where we opened, that was about 130 points. So you're not really going to get too much further. The target eventually would be down here, but we don't have enough structure to validate that we're going to just keep breaking through all the bullish imbalances. So anyways, going into the day, we obviously had this abnormal wick. So the data low became my target my draw on liquidity if we got a valid setup towards it. So we end up running that very nicely. And the first setup that I ended up taking was right here. So we're holding the bullish or the bearish 1 hour, and we had an inverse show up right here on the 1 minute. I jumped in shorts here, and my stop was above here, or it closed below, or closed back above, targeting the data lows. And I would have scaled, probably scaled some here at this low, and then go to break even, let the runners go. This was the re-entry. If you missed the first one, you could have re-entered on this break again, which would have been another potential entry, with still good risk to reward and a lot more efficient even. So these were the two trades that I think, or these were the two best trades of the day. And if you took and left runners, you could have left runners to these lows. Who knows? Typically when the draw on liquidity is strong, the draw on liquidity is really strong, and you could have held runners to these lows here. But that's a little bit of hindsight, if I'm being honest. I'm not really sure if I really would consider that like something that you should have seen or targeted or cared about. But the data lows was enough. That was a lot of points to capture early. And then for me, I kind of messed it up because I'm still getting used to Top Step X, and I'll pull up here on my 50K combine. As you can see, the P&L for the day was 165. When we executed, where we executed here, if you notice this indicator right here called link, at first this morning I was looking at it and I didn't know what it was, so I just exited off my chart because I don't use this indicator. So I was like, I'm just going to get rid of it. I don't know what it does. Didn't think much of it, but going into the day when I entered my trade here, it actually controls the link between the DOMs. So I switched to micros, and notice how the chart switches to the micro chart, right? It does that so that when you execute, so I switched the DOM. Or if I switch to the ES, it pulls up the ES chart. If I pull up the NQ, it pulls up the NQ chart with all my annotations. So I watched this chart again. Like I said, I watched this one because it has better levels. And I'll give you a great example of why you should use the full or the regular chart. Is because notice here on the full contracts, we have equal lows at 1105. We have equal lows, right? They're equal, perfect equal lows. That's a good target on liquidity. But look what happens when I go on the micro chart. On the micro chart, 1105, which is here, this low is not perfectly equal. It's a very, very small detail, a very, very minute, like little intricacy with the differences, but it can make a really big difference when you're trading. So I want to go off of the actual NQ, and that's what I was doing today. So when I went to take this trade, I switched to micros, and I had this thing taken off, so I wasn't linked. Again, just something I'm learning, a little just kind of hindered me. And when I got in, I couldn't see my stop loss on the chart like I normally would. I would normally see it visually. So I didn't have a stop loss in place. I couldn't figure out how to get one in because it's happening quick. So I just exited the whole trade right around here. It is what it is. It's pretty annoying because, the trade worked out really well. And I didn't get to see how I would have managed the trade if I was in it for real. So I can only guess. I can only assume that I would have taken some off at this internal low and then let the rest run. Who knows, right? Who knows if I would have panicked out right here, right? That's something I do a lot. So it's annoying because I didn't get to practice. I didn't get to fully practice my trading skill because I got flustered with the mistake with unlinking the chart and just something I wasn't used to, right? Something I wasn't expecting. So again, it is what it is. And it's just unfortunate, but it is no big deal. And after this trade, that's pretty much, and especially after these lows get taken, it's pretty much day done for me. But one of the things I would like to go over is kind of what I was looking at after that, right? And why I could anticipate this move lower and how you guys can start to do so yourself. And a way I could have anticipated this move lower is right, we take out the low. We build all this liquidity here, and we don't rerun the low. We have low a day now that hasn't been taken. And if we draw our fib retracement from the top high of the day to bottom of the day, we had equilibrium. So we put in a high here. You think maybe we're going to sell off. Notice the lack of displacement, lack of fair value gaps. Then we run back up above this high, so we take out liquidity. We hit equilibrium, and we also pull back into a 30-minute imbalance here. So if you notice, this 30-minute fair value gap gets tapped into on this wick, which is an equilibrium of this entire move. And I do believe the draw on liquidity is a lot lower because we have an SMT on the higher time frame. Here we have a SMT. And we swept this high. So we can start anticipating a market maker sell model to the downside these next day or the rest of the day, whatever the case may be. But again, this is kind of how I start looking at the market. The original consolidation is down here. We get an expansion move up. We come down, we hold bullish order flow. We pump above the highs. No displacement through the high. Notice how we have displacement through this high with the candle closure. And then we get a nice wick, a nice rejection inside a bigger time frame imbalance. We get an SMT again at the high. We have an all-time high as SMT. We sell off. We don't really displace through low. We come back. We hold a 1 hour. We hold this 1 hour bearish. We sweep out liquidity. We're nowhere near this high. Again, another bearish reaction. Now we're displacing through lows, right? We displace through this swing low. And if we break structure to the downside or run this fair value gap, I think this is the last thing holding us on the 1 hour. Once the 1 hour can close below this gap, I do believe we will be seeing this low to finish sell side of the curve. So that's kind of what I've been anticipating, and maybe we'll get a little bit more of a sell-off than we've been having. But this is just kind of how I look at the market on a higher time frame and why I'm super bearish currently, right? Intraday gets hard because you have to figure out where the reversal is, but that's how I use the higher time frame to align this sell side of the curve, right? This is the original consolidation here. It's the same thing as on the bigger time frame, almost an identical mirror, right? So if you see, this is the buy side. We have this high, we come down, we sweep out the high, and we put in a high inside a fair value gap. I don't think we had an SMT at the time, but then we displaced through this bullish imbalance here, and then we sell off. We made an SMT here, so we held up. I was expecting maybe this high to get ran one more time to be like a turtle soup to keep going lower, but now we are running the low, and now we're finishing sell side of this internal model curve. So it's all fractal, which just means that every type of setup, and there we just ran the low. So it basically just shows that every time frame just kind of mirrors price action, right? Like this on the 1 minute here, this consolidation, this model here is just like what I showed you on the 1 hour, right? The 1 hour, we get the consolidation, we get a move up, we run this high again, and we start selling off and holding bearish order flow. So I would definitely study that on your charts if you if that maybe was like a light bulb moment, or you kind of like, maybe if you don't really understand what I'm saying, just kind of look for, this is pretty much what a market maker model is, and that's essentially what the market is, at least for the year I've been trading. That's kind of, it's just all the market moves. It's just these different market maker models on different time frames. So just keep this in mind when you're trading. Figure out, okay, so notice how we're starting to sell through this low, right? Why do you think that we didn't sell through this low and come down to here and just start running down through this low right away, right? Why don't you think that when we first took this low, that we didn't just keep going? The reason we didn't just keep going is because this low has a lot of liquidity. There's a lot of buy orders because of people's stop losses. So we run this low, and there's a lot of buy orders getting filled, and price just ran an objective in the market, right? That's why I said after this gets taken, you could be done, or you have to wait for a lot more structure, because no setup in here is going to be probable until we pull back to equilibrium. You can't look for shorts, but you also can't really validate longs here because there's no structure to validate longs. There's no reason to be going long in this area. So the reason why we don't just dump straight through is because we did already have such a big dump, right? The market's not just going to keep ripping unless it's, some days we have crazy days where it just keeps ripping to the downside. Today we had a 195, 200 point sell-off, right? We have to build more structure when we take a big time frame objective, which is what we do. We chop, then we put in a high. This is now our point of interest to manipulate with equilibrium above us, with a higher time frame fair value gap, with a 5-minute order block right here. Again, you just compound all these different building blocks that order blocks, fair value gaps, equilibrium, market maker models, and you just read price action. That's all you're doing all day. So we had this 5-minute order block in equilibrium in a 30-minute imbalance that you expected price to draw to. Notice how we reject really, really well. It's no accident why we reject here. And then we get a sell model to this low, right? And I can't tell you what's going to happen after this, because even though I am bearish to these lows here on the higher time frame, I can't tell you that we're going to run there instantly, because you need structure to validate these things, right? Intraday, we just ran stop loss, we just ran liquidity down here, right? And we had we're having just a little reaction after taking it. This fair value gap is important. But we also made a 5-minute gap here that we could rebalance to then go lower, right? It's just always looking at the market in these smaller and smaller models, right? We could pull back to equilibrium, which is in this 5-minute, and we could sell off more, right? Until you get that big run that runs all of the liquidity. So that's kind of like, I wasn't actually expecting to go over market maker models, but we kind of had this one set up really nice internally. So it's really a really good example of just how everything is fractal and price and stuff like that. So this is a pretty clean day. This order block, this fair value gap, equilibrium. Market moved really cool today. It moved in a way that's fun to read. I love when the price moves. When it moves kind of exactly how you've learned, right? Because it just makes it, this is just, if this doesn't look really good if this doesn't make sense to you, then just study more and more videos on market maker models. just understand this, because it's the fundamental of how I can trade, right? It doesn't always matter, right? Like this first entry here is more of a data low confluence, but it's also market maker on the higher time frame, right? We swept this high, we have a fair value gap, we have an SMT at the higher time frame, right? It's all the same thing. Even if I'm not obsessing over where we're at on the sell side, buy side, whatever, I'm just trading on liquidity. But knowing these things can help you form biases. Daily bias can help you form intraday bias, right? Like right here, you would think that maybe we were displacing to the upside, maybe you're trying to take longs in here, and it just wouldn't work out because of the overall model, right? What's getting respected, what's getting disrespected. This order block got respected, this 30-minute got respected, so there's no reason for this to hold unless we come down in here and we disrespect the bearish imbalances that we created and then run through this, right? Anything can happen in the market. It's not like we had the reject the order block here or the fair value gap, but because we did, then you have to look at what's happening, right? You have to zoom in and say, okay, is this 1 minute fair value gap holding? Oh, it's not. Okay, then what are we maybe going to? Or maybe we're re-sweeping a high, or maybe hunting equilibrium. Are we bullish, right? And you just ask yourself these questions, and you just formulate ideas in your mind, and you just keep going from there and build on each other each time. So that's kind of a rundown, honestly, on market maker models, which I might, which is kind of the focus, I guess, on this video, is just identifying market maker models and trusting your analysis, right? So as far as the trade I took today, it is frustrating that I got out early just because of the mistake, but who knows if I would have held properly if I didn't make that mistake with the charts. Still getting used to Top Step X. I do like the platform. It's just, I didn't know what that link button did, and I got rid of it. So we'll be back tomorrow. I don't know if I'll be able to find a trade because I have to leave. As the last video I'm on vacation with my family, so I have to leave early tomorrow morning. So I might only have the first hour and a half of the trade during market. So I might, if I don't find a trade, I don't take a trade. But currently, right now on the eval, we are up 593, so close to 600. Again, the money amount doesn't matter. I'm not really too concerned with that. But that is where we're at. So we'll keep coming back tomorrow, and hopefully we can start following our risk plan to the T, right? I want to risk 400 per trade, and I want to, at least make 400 on each trade. Just to follow one trade per day and the risk to reward ratio that I'm trying to establish, right? But this is a very, very good example intraday, right? Just look back at price and kind of not taper, but kind of like hindsight read this chart and then look at the overall time frame. Another really good market maker model I would point out from a few days ago, or not day, yeah, I guess 2 weeks ago. It's just this area and price here. This was a really, really clean market maker model. I was highlighting this when it was happening live time. Just study this area and your price from Monday the 17th. So Monday the 17th through the 3rd of July and the 4th of July. That area on your chart would be really good to study the market maker models on the higher time frame and smaller time frame. So now again, if this 1 hour fair value gap gets disrespected, then I'm immediately looking to target the data lows, and that's what I'll be expecting to happen. And then we also have things set up now. So we'll have a 1 hour order block, right? If we disrespect and we close below it, this will now be an order block on the 1 hour. And then you just keep using your confluences to keep finding things, and you zoom in and then eventually you find entries on the smaller time frames. But you don't want to overtrade, you don't want to overcomplicate things. Just find a model, find an entry model, and start practicing, right? You don't have to be perfect at reading the market, where the charts are going, because honestly, knowing where the charts are going is half the struggle. Most of it's just being able to execute a trade and being able to be confident in what you're doing. So just find an entry model that works for you, and start practicing it, because I do think that just practicing your execution is actually probably 90% of trading rather than reading the market. I feel like reading the market is about 30% of trading, even though I just said 90 and 30. But my point being is that I think executing risk management and psychology is a lot more important than even just reading the charts, right? If you can read the charts perfectly, but you don't have any idea how to enter, and you don't have any idea where the risk or where you put your stop loss or how to hold your trade, then all that knowledge is not going to really do much for you because you don't know how to execute your trade. So yeah, very, very clean day in terms of the charts and what they did. But again, man, we're far off where we need to be for becoming, reaching the levels in trading that I want to reach, which is making money consistently. But it's just another day, right? We don't get too caught up on bad days, even though it's not really a bad day. We made money, but we just didn't get the fully capitalized, right? And I think that's another thing too, is it's easy to look at everyone. Like I know Dodgy took that trade, obviously. It's like his one step for life model. I know people took that trade, and I know that they banked really good, and it's just frustrating to not have benefited the same way that other people do, right? And that's one thing I have to say too, is just you can't compare what you're doing or to what other people have done or doing or did today, because that has no effect on you, right? That has no correlation to what you're doing, but it can get in your head. It gets in my head too. It gets frustrating that somehow I see the trade and don't get the benefit the same way others do, or maybe I didn't see the trade and maybe I thought I should have. So that's one thing you have to really manage when you're trading, is just being envious of other people's success or just stuff like that. And that is a problem that I also go through, is just wanting things to happen right now instead of just letting the process and getting better each day, which is what I'm doing. And I just need to keep focusing on getting better each day that I come into the market. Just follow my plan better, hold my trades better, and then just learn from experience, read the market better, get a better understanding of the charts and how they move, and that's really all I can do. But sometimes it's easy to get caught up in what other people did, how much they made, or maybe when you lose them not trading, it's really easy to get caught up in other people. That's why I say, honestly, avoid watching things that aren't education, right? You don't need to see how much someone made if they're not going to teach you how they did it. You don't need to see, someone's cars or something that they have because of trading. If it's not, honestly, you don't need to see that at all. Honestly, I don't know why people love to flex their cars and stuff, but it is good marketing. I understand that, but my point being is, don't look at something unless it's going to help you, right? And the only way that something's going to help you is if people are actually going to give you knowledge. People are going to give you benefits with, if they show you their P&L and you're like, wow, that's a lot of money, I wish I could do that, and then they show you how to actually do it, or what they did, or what they thought about during the trade, then that's some actual value, right? But then don't just get on Twitter, see people's P&L, or go in the P&L section on people's Discords and just see people posting their winners, because that's not going to do anything for you. It's just going to make you feel like you missed something, right? Where I could take a trade that wins, and it could be a great trade some days, and then I don't have to worry about what everyone else did. And then the days I don't find a trade, you see everyone else take a win, right? Because when you go online, you're only going to see people's winners, right? You're only going to see the highlights of people's trading days. You're only going to see the best moves they caught, not the other 15 trades that they took. You're not going to see their losing days, stuff like that. So just remember that you're only seeing what people want you to see, if I'm being honest. So. But that's the thing for me today, is that it feels frustrating because it feels like a wasted day, which is what I'm having to try and work through, is not looking at days where I don't make as much as I would want and think about it as a bad day, because I know it's not a bad day, but it is just it's just frustrating because you want things to happen in a certain time with trading. You want things to happen quickly, because it just would be nice, right? Like I would love to be profitable as soon as possible, but the reality is, I can only be profitable by doing things that make me profitable, which is holding trades properly, reading the market well, and proper risk management, right? So if I'm not doing those things, I don't deserve to even be profitable in the first place. So I can't just worry about what I don't have. I have to worry about focusing on things I can control, which is the trades I enter and the amount of work I put in and how I risk manage, right? So, but the reality of trading and learning trading especially is that's very, very hard to not compare what other people are seeing success with, and what you're not seeing success with in the moment, because until you make money, right, you have no real, I say, proof. Like, I don't have any proof that I've been getting better because I don't have any money coming in, even though the proof is actually just from, every day feeling more confident, every day seeing better trades, reading the market better every day. But because I don't have live earnings, it can get in your head and make you feel like you're not doing as well as you actually are. Because it's also a lot easier to have proper risk and proper rules and stick to your trading plan when you're making money, right? Because if I was making 10K a week from trading, and I only took one trade a day, and I knew over the course of a year I would make, what's that, over like $300,000, $400,000, $500,000. If I knew I was doing that well with trading, it would be very easy to hold my trades. It would be very easy to not overtrade. It would be very easy to stick to my trading plan, right? Because you have the proof of concept that this works, right? So that's the trickiest paradox that you're in as a new trader, is just you worry about, okay, am I doing the right thing? Am I getting better? Is this possible for me? Will I ever make money? Will I ever get over this barrier of unprofitability or break-even stage? Because everything feels impossible until you do it, right? Everything is impossible until you do it, and you have to get through it. So I say it's a paradox because it's like, until you're making money trading, it's hard for you not to want to make back a loss, because when you take a loss, you're further away from passing your fund or getting a payout. So until you're making consistent payouts, it's hard for you to lose. It's hard for you to only take the best setups, because every setup you see is an opportunity to get better in your sense, or make money, which is your main goal, your main focus. And it's just really easier said than done when people say, don't worry about the money, don't focus on the money, don't worry about your P&L, don't trade your P&L, don't trade this, don't trade that. You're focused on the money, you're focused on money. It's very easy to say, right? It's very, very easy to say, and being able to really understand truly what that means is a whole different thing than just saying it, right? And that's where I think I've been making the most improvement, is really just is in that sense. But I still can sense myself with those types of mistakes that are just an impulse away from trying to make money, trying to force something, trying to take an extra trade, trying to do this or that. And it's just the hardest part, is because, like I said, if you were making money consistently day in, day out, and you had a plan that you knew you were following, if you take a loss, it would be no big deal. You just show back up tomorrow. Or you took a win, great. You get in a good trade, you hold it properly, great. Because you know that what you've done works, because you have proof, you have actual data, you have money coming in that supports the claim that you're making, which is, this plan works and it's profitable and I have an edge in the market, right? So it's a very big paradox with trading, is that before you make money and before you're doing consistently, you just have to believe in what you're doing works. You have to believe in it you have to believe that it works as if you're already doing what you need to do, which I think is why people say that, like, the manifestation and stuff like that really works, is because you have to truly believe something before it can happen, right? You have to truly believe your system works, or your trade model works, or you know what you're doing. You have to truly believe it before you actually do it, or else it won't work, right? If you don't fully believe your trade is going to take profit, then you're going to get out early. If you don't truly believe you know what you're doing, you're going to second guess all your trades. If you don't truly believe that you can make money with it, you're going to overtrade, because after you take a loss, you think you'll never make another winner, so you feel like you have to go get that loss back as quick as possible, right? So that's why I say that if you don't truly believe in what you're doing, you're never going to be able to succeed with trading, and why it's kind of similar to when people talk about manifesting and stuff like that, is because if you don't believe in what you're doing, you have to believe in what you're doing even before you're actually doing it. And that's one of the things I'm working on the most, I think, mentally, is just every day I'm just trying to reset and refocus and redial in on, okay, every day I believe more and more that I can actually do it, right? I think there's still a lapse in my belief, right? That's why I get out some trades early. That's why sometimes I might have an impulse to take a bad trade because I'm wanting to make money. It's because I don't truly believe it 100,000,000% yet. But I do believe a lot stronger than I did before, and that's all that matters, is just coming back every day, getting closer and closer to fully believing it, right? And eventually I'll turn that page and fully believe in what I'm doing, fully believe in myself, fully be confident in my trading plan, and be able to execute how I need to every single time, no matter what. And we're very close to that. So honestly, I think that was a master class in market maker models and psychology. And I don't think people really even, I've never really even heard people break down the psychology piece of kind of like the paradox of having to believe in yourself before it actually works quite like that. Maybe someone has. I don't watch a ton of, I don't watch every video on YouTube, but it took me a long time. I figured that stuff out. Not that it's the secret sauce or anything, but I had to just spend a lot of time thinking with myself and really reflecting on my own thoughts to figure out and to free that mind and just figure out, right? I encourage you guys to spend a lot of time really reflecting on every idea, every thought, every concept that you think about with your trading and really dive into it. And that's how I figured out that a lack of belief is what's causing all these problems, right? I'm really skeptical with a lot of things, and skeptical of me to trust my system works without proof, because I'm a proof oriented, right? I like to proof of concept, right? But I realized that the only way I can do it is if I just truly let myself believe that what I'm doing works. So, but yeah, so I think that's a very important thing. And again, it takes time. It took me a lot of months to figure out that was even what it was, right? But you have to do a lot of self-reflecting with trading to really, really figure out, if it's going to be for you or not. And I don't think it's some people might become easier, some people might come harder. It really just is a very individual thing. Again, that's why you have to just control what you can control, which is yourself and your own thoughts, and the work you put in, right? Don't worry about anyone else's P&L unless they're going to help you out, right? If they show you their P&L and then they teach you how they did it, or they teach you, what they did, then cool, right? But if someone's just marketing you with their P&L and they're not really providing value, don't pay attention to it, right? And I really encourage you to not even worry about what other people do day in, day out, and just learn about, just pick up information. Don't worry about stuff that you can't control, because you don't know their risk management, you don't know their rules, right? People don't really talk about exactly how they trade, like their specific rules, their specific risk management, because a lot of that's very discretion based, right? A lot of traders do discretion based risk management, so it's a little bit harder to copy someone or to worry about what someone's doing when they're discretion based risk managing, which means basically they trade, their position size depends on how confident they are, how much they're up on the week, stuff like that, right? And it's hard because then you see someone take a trade and then they make a lot of money, but you don't know how much conviction they have in the trade. You don't know how much their risk management is. You don't know that stuff unless they directly tell you. And that's where people get caught up with being like, oh my gosh, like I should have, done this or that. Or I should have taken this trade, or I should risk this much, but it's all personal. You have to develop those things over time for yourself. So that is all I have for you guys today. I really feel like this was a really good video, honestly. I feel like this was one of the better videos I've made in a while. And I will see you guys. I think the video might come out a little bit later tomorrow, maybe after market closes, because I'll be driving back home. So it'll be a few-hour drive. So the video might come out a little bit later, but I'll just be able to go over the whole day. And we'll see if we get a trade tomorrow. Hopefully keep up the momentum. We are getting better each day. But again, slower day, a little frustrating with the mistake with my Top Step X account, but we build from today and we keep going. So I hope you guys had a great day, and I'll see you guys tomorrow.